Hey everybody, DayTraderRockStar here, and today's video is going to be a great one. The title of the video is 7 things to do to qualify with your prop account. Now we're going to be talking about prop accounts just on this video, basically because it's an easy way of actually getting started trading and not putting a lot of risk in the market, meaning you don't have to bring a lot of your own funds in the market and learn. So this is an excellent way for a beginner trader to start off trading and learn the ropes without getting, not getting really destroyed in the markets and losing money. The markets are very, they're a complicated, the markets in general. I talk about them like they're people, but when I say markets, I'm really talking about the different ways that we trade the stock market, the futures and the ES, the NASDAQ, the Dow. These are different indexes that we could trade, and we usually focus on the ES, but a lot of people focus on the NASDAQ or the Dow. But I focus here at Day Trading Radio typically on the ES or the MES, which is the micro contract. Now, this will be a video where maybe some people might not understand the terminology, what a micro contract is versus an ES, E-mini contract, etc. It does require a little knowledge, but I do teach this. If you go to Day Trading Radio, look at the DayTraderRockStar.com, or go to my YouTube channel, especially, I have all the educational videos out there to kind of get you really started. But as usual, I like to kind of hammer home the important aspects of trading. I've been trading since 2007 on the air, 1996 full time, and I've seen a lot of markets, and I just had a going back and forth with someone on email, and we're discussing some of the techniques and the strategies that I trade, and it gave me an idea to say, I need to really put this down on video, because I explained it to some of the members of Day Trading Radio, but it's very important to have it on paper. I call it the business plan. Everybody who has a business, if you're a trader, you should consider trading your business. And when you have a business plan, it kind of establishes a set of rules that you want to continue to abide by. You don't want to like in trading, and again I kind of went over this, lots of times in trading we could compare it to gambling in some ways. If you're not really knowing what you're doing, you're pushing a button, you're hoping that the market's going to go a certain way, but there's no guarantee that a market's going to go a certain way. There's a lot of variables. It is very hard, but there is techniques out there, and there's a strategy that I teach that I feel is the best strategy out there, but it requires discipline, it requires patience, and those are the two things that traders tend to lack. And when you start to fall behind on those, that's when you're going to get into trouble. If you can master, those two, qualities, you're going to do real fine by following the setups and the strategy and the methodology that I teach. That is not a problem at all. Let's also discuss what this video is for. There's a few different types of trading styles out there, and this is going to really focus on the one up on the top here, scalping. Hold a position for just several minutes. And this is great for people who have time. You have time to be in front of the markets. If you're you're interested in the stock market as an investment, you can use these same techniques, but you put them on different time frames. You use these same criteria and the setups, but you apply them to your daily time frames, your 60-minute time frames. But for the purpose of this video, and for purpose of who should really pay attention to some of the stuff on here, these are going to be people who have time between, and again, I trade Eastern Standard Time, 8 o'clock U.S. markets, from 8 o'clock to 4 o'clock every day. So if you're out there and you have time between 8 o'clock and 4 o'clock, tune into DayTraderRockStar.com, and you actually get to see us trade. Better yet, take a trial, get in our chat room, and get to ask me questions and see the teaching live. Again, that's very simple to do. Just head over to DayTraderRockStar.com. You'll see a link, and you can sign right up. The So it's going to be focused on scalping, and scalping is basically getting in and out of the markets on a fast basis based off of some of the signals that I'm going to review with you. I teach these every day, but I want to review it, and and it's always important to kind of put that in paper, on paper, and just make sure you understand exactly what we're doing here. Here's a little chart that I made up for people out there, just to kind of show you the different techniques that we use. I use a divergence technique based off the George Lane's divergence style methodology, and I've tuned that to my my method. We add multiple time frames to that, some other indicators, and it's given us these great signals, which I call the super signal. And that consists of, again, you'll see some of it right now. Actually, I have a trade going on right now. I'll just pull this down here because this is going on right now on our prop account, and it's late at it's kind of late at night. It's coming up on 9 o'clock, and just to show you, give you an example right here. It's kind of an interesting setup. There's two setups right here that I pay attention to. Now everyone's going to be in front of the market like I am. I'm passionate about trading, and that's what I do. And I teach trading too. And if you want some one-on-one instruction and to get you really started and making money fast, then reach out to me at ironaction@yahoo.com or head over to DayTraderRadio.com. You'll see a link there for coaching and stuff. But setting up your charts, getting everything set up, I do it all. I can help you get it set up. I can set it up for you. And so here we had a low, and we had this candlestick lower low, and you can see there's actually three bands of stochastics here: 9, 3, 14, 3, and the 60, 10, and there's a volume chart underneath that. We really use this. I also use the 40, but more towards the day, and you can see the stochastics here at this low, and then we kind of moved up a little. You see that red line that represents the low, and let me I'm always. Rule number 1: always take your profits when you have a nice profit. So I want to take that. I want to take that profit. Take that profit off right there, right now, because I had a little profit in it right there. So I want to take that off. But let's go back here to the setup here. Oops, sorry about that. Now, after you determine that this type of trading fits your style, your lifestyle and stuff, and you want to try that, here is the business plan for traders. Now, the business plan is basically, like I just said, it's a set of rules that's going to define everything that you need to know for trading. It's something that puts you in a box that you can't fall out of, or just kind of mess up by going outside the important path that you need to take to make money in this market. Because, of course, the famous saying, if it was easy, everyone would be doing it. Well, 99% of the people do fail, and it's because of their not being patient and they're not being disciplined. You have to have everything defined for you. So I defined everything. When I do teach, I try to define it as an order entry criteria, profit exit criteria, where you want to get out, an automatic stop, and where that goes in when you take the trade, the risk management of the trade, how and when to increase your position size, and how to set up your charts and stuff. That's basically what I want to make sure that everyone knows how to do when they start trading. It doesn't matter if you're starting balance. In this case, you don't start with anything. You start with a prop account because it really costs you nothing, and it gives you a great opportunity to open up an account with real money, because all you have to do, I consider it's like a little video game. You basically get a simulation account, you apply the rules, you qualify, and then they give you a real account, and you just continue to do that. But it's not as easy as it sounds, and I make it sound, because, again, you're going to get in trouble because you're going to have lack of discipline and lack of patience. All right? It happens. I will show you exactly the setups, and I do that. We have many alert systems that go out. We have many tools that actually identify that. I built a whole method around just a couple setups so we don't miss those. But again, everyone has to usually find their own path, and a lot of people try to do that, eventually coming back to the path that I laid out. All right. Now, these are playbook trades. These are some trades that you'll hear me talk about: quad rotations, divergences, and flags. And these are basically three different type of trades right here. different versions of the trades. Quad rotation mean the different time frames, trend lines and VWAPs, and the divergence and the flag. You know, basically, like I said, these are three different type of trades. You have a flag, which is a continuation pattern. That means you trade flags in very aggressive markets, meaning that you're moving, trending very strong if you're moving up or moving down. If you're chopping around, you don't really want to use flags too much, but it's very easy to identify a trending market. The buy and sell divergences, that's our go-to number one setup. It's our foundation. You know, everything else wraps around it. Sometimes we could actually have a quad rotation and a quad rotation and a divergence. It's called a quad rotation divergence. This is, you know, our go-to trade. And imagine having that setup happen twice, 3 times a day, and you're sitting in front of the computer for 6 or 7, you know, 4 or 5 hours, maybe 3 or 2 hours, and you're waiting just for a couple different trades. Well, that's the key. That is the key right there, is not over trading. Over trading is trading even one time when there's not a setup. You have to have a qualified setup to make money. I see it every day. We have hundreds of traders trading in our chat rooms, and a lot of them are just going to be taking trades because that's what they're doing. They're here all together, they're talking, they want to make money, so you take the trades. I get that. I understand that. And I think everyone has to deal with that. This is from a mini course that I have out, and we're talking about trend lines here. And trend lines are another very important part of the puzzle. And again, you could pause the video and read up on it a little. I won't go into it too much detail because I don't want to make this too long of a video. But trend lines are very important. That's why I added on to this. And I will give this little presentation, this PowerPoint presentation. I'll give this to you guys if you want it. I'll put the link in the description of the video. That way you can refer back to the PDF file. All right. Again, you've probably seen this. If you've seen me trade before, I've discussed what the divergence is and what we trade it and how we trade it. It's very important to learn that. That's our number one thing. And that's what we're trading. But again, the key to this video is actually the top 7 things, 5 to 7 things to do to qualify on your prop account. And again, qualify your prop account, be successful in trading, as it goes hand in hand. It doesn't matter if you're trading real money or a simulation account. You want to take the same trades. You do not want to overtrade. And that's probably number one. Overtrading kills the trader. And again, I will say, trading any amount of time that you don't have a good setup or qualifying setup, an HPS qualifying setup, is overtrading. And let's go to the videotape right now, Johnny. Just to show you what we're looking for is this a little example right here. It's broken down here. Sell divergence. It's called a lower low entry. It's 2 stages. You make the first stage is the first low, and the second stage is the second low. But the second stage comes with a higher low and stochastic rotation. The key here is between this level and this level, there's a little math involved. The angle of this degree means how strong this setup is going to be. So that's also important for me to identify. And when I send out my alerts, I take that in consideration. Not every divergence is equal. All right, not every divergence is equal. So let's take a look now that you know what you're looking for here. So here we actually, this is a picture of the ES, which is the S&P E-mini contract, and you can trade this. It's a future contract. You can trade it. It's not that hard to trade. Again, if you're just starting to learn how to do this, you really want an expert to kind of get you started, set up properly and everything. All right, so I'd advise either searching me out or reading, going over some of the videos. But if you want that that personal touch and really get a good start here on how to make money right out of the gate and not go through that learning curve where you're losing a lot of money, then reach out to me. Here's your low and here's your lower low. Here's your low and here's your higher low. All right. There's an angle between this. These stochastics is an oscillator. This is called an oscillator. And it's, you might not even know what this means, but there's a lot going on behind the scene or underneath the scene here. This is measuring out basically what's happened here, going back how many periods this oscillator is. In this case, and again, I'm not going to go into this. I teach this enough, but if you're familiar with the stochastics, it's measuring, it's going back how many candles, which is the percentage K. The stochastics are broken down into percentage K and percentage D. Percentage K tells you how many candles you're going to go back and use that data from. The percentage D is the moving average that's placed on that data and gives you a D line, which is your signal line. And this signal line is the one I use. I get rid of the other one. You see how choppy the other one is? If I put my mouse over it, you see how choppy that is? There's no good in that. I mean, what I want to see is this right here. I want to see the combination of a low and a low. Normally, what would happen is the market's going lower, stochastics are going lower. The markets are making a low, stochastics are making a low. Market's making a lower low, stochastics are making a lower low, or they're embedded, and we don't see that. But once we see an obvious divergence, meaning we have a low here, but a much higher low here, and this angle is all important. Right now you can see how that angle, you see that it's about 15 right there. Anything above 10 is really good. The higher that angle, the better. If it was a straight line, that would even be better. That's almost a hidden divergence, but it's very important. So that would be a setup right there. Now that's closed, but it's still a setup. That still qualifies as a setup. So that's our major divergence right there. Now this is right now, just happened tonight. You can see the low here. And you can see that little candle low. And you just happen to be in front of the computer. I remember I used to travel around Europe trading back in the 90s. And I'd be in the internet cafes, and I'd rent all these computers. And, at the time, I wasn't really, I didn't break down and create my own methodology and really, perfect the divergent style trading at that point. It was different times back then. But now, if I honestly believe you could travel around the world and trade like this, and you just have to be in front of these divergences. And that's the problem, is being in front of it. That's what I do. That's what my service is. Day Trader Radio is be here, identify these, send out the alerts. We have a special alert system on the Zello now that if we have any of these alerts, I just push a button. It comes right over your phone. I said divergence. If you want to go check it out, you take the trade. And these trades make money. I mean, that's our business plan, is to take these trades. Nothing other than these trades. Anything more is guessing and gambling. All right? So you had this 14.3. You see how high that stochastic is? That made that little low there. That's even a reversal candle too, which helps do it. And that's in the middle of the night too. I mean, not the middle of the night, but look at that beautiful move. So that was a beautiful divergence in itself. And who knows where that could go. 43.56 all the way up to 60, almost up 10 points. We'll take 5 points, take 2 points. It's all money. And it's all high probability money. And when I say by that, is there's a great chance, 80 to 90% chance the trade will work out. And all you have to do is put a stop underneath that previous low, that divergence low, and you protect yourself. Now, when you're trading prop accounts, you want to do that. You want to put that trade right in there. And in some cases, you have a nice divergence. You want to take a gamble on that. For an example, in a 50K prop account, you're only looking to get, and again, you could trade the MES, you could trade the MES, the ES, the net NQ, the micro contracts, different ways of different vehicles and stuff. But when we have a qualifying setup, the fastest direction to get to where we want to qualify is probably, taking the bigger trades. So you probably concentrate on trading ES on this. And with ES, you need to make $3,000 on a 50K account, which is, again, it doesn't cost you anything. It costs you $20 to take that. It's almost like a challenge. They do call it a challenge. And if you do it, and you have all the time in the world to do it, basically, without losing 2,500, and that's not going to happen if you take the trades that I send you. if you go on your own, and I tell you famous stories about this, I funded 4 good friends of mine, traders, and I taught them to trade probably in around 2000 because the internet boom was going on. And I opened up a bunch of Schwab One accounts for my friends, and we were all trading. I converted my apartment into a trading desk and stuff, and I remember, some of them were coming down from, about 50 miles, and sometimes they wouldn't come down, and they would trade at home. And right when they started trading at home, it became gambling. They weren't disciplined. They started taking their own trades, and the next thing you know, they all blew up their accounts. And that happens, and that will happen, and that's not a bad thing. It's part of nature. It's part of the process. It's called the learning curve. Just don't want it to, you don't want the learning curve to happen with your own money. That's why the prop trading is so good at this point. That's why I promote it so much, because it's an easy way to get funded. There's no hassle to it. You don't even talk to anybody. It's a challenge. You take these trades, and you're in. So that's where we're kind of focused on now at Day Trading Radio, is trying to get these traders funded. And we have so many traders now funded and qualifying. If you want more information, just fire me an email or ask me, and I'll send you the information on anything you need. So here we have a divergence, and you have that run up here, and you just follow it up with a trailing stop. And there's techniques of what you want to do and how far you want to take this. Like I just had a trade before, which is our second type of trade. Remember, we only focused on 3 types of trades: a divergence setup, long and short. That doesn't mean that we could only go long. We could also go short. It was actually a little short divergence here where the same setup is. You see that high here? You see that high here? And you see that high here? But you see that high here? And that lower high right here? So you have that, what's called a sell side divergence. And you see that move down here. Now, this turned into what we call a bull flag. And this is what I traded before. I don't know if I still have it on my screen before. But anyway, what a divergence turns into a bull flag, you'll notice that quickly because of the strength of the 60 period down here. If this starts to turn back up and gets over 80 or holds above 80, and this gets to 20, and this holds above 20 or closes back above 20, and all these things line up here. Again, I have things down to a science. I have it down to a science. Once that closes back over 20, this is back over 80. That's considered a buy. So that was our bull flag right there. And we just had that trade and we just took it off. And I'm not worried about how much we're going to get. I'm worried about our rotation and taking profits. The object is to get in and get out, because another setup will eventually show up. Now, there was a little divergence right here happening live right now. Not that something I would take right now, but you see that little low and that little lower low? And you had this little low here. And you had this little higher low right there, and you can really see it on the 14.3 here. And look at that. You can start to already see the momentum shift. Now, the secret about stochastics are measuring the momentum. And again, a great example. Let's see if I can bring it up for you. All right, the genius behind George Lane's and the stochastics is how they came about it, which is a story in itself. There was a bunch of Polish cement mixing guys. It's just a very, one day I'll tell you the story about it. But he wanted to explain to people exactly what was taking place underneath. What is this oscillator measuring? And it's measuring the closing. If we look at a candle and we look back and we're looking at how this candle closes each time. Is it closing near the top part of the candle or closing near the bottom part of the candle? And it's plotting that on a scale of 0 to 100, and that's your stochastics. It goes from 0 to 100, where 20 is considered oversold and 80 is considered overbought. But you could still go to 100, and you could still go to 1. All right, and depending on how these things start to switch, when this starts to turn back up, that means our candles are starting to close higher on the candle on average. Not just doing it, but it's on average, and that's the key, because it's averaging in all the other candles. So we're starting to see the average start to turn back up, even though we're not seeing it in the price. So so we're seeing this pull back. We're actually taking out the lows, but we already know that internally the stochastics are starting to turn up, meaning our candles are starting to turn internally. And that gives us a divergence, which is a proactive indicator instead of a reactive indicator, because typically you get an indication that things are turning around. When things turn around, you're getting an indication before things turn around here. So that's why the stochastics are genius. And that's why you should always trade with them. And you should only trade it one way, the Rockstar way. So you have the downside. So then we have that bull flag. So we have a divergence, buy and sell, and we have the diverge, and we have a bull and bear flag. And we have the little divergence right there. Just a little divergence like that will give you something. You know, maybe it gives you a point, but a point on the ES contract is $50 on one contract. All right. I always like using this as an example. All right. Let me see if I can bring this up for you here. All right, you can see that little move here. If you actually jumped on the divergence, that's 30. They'll call it 4,362 and a half, maybe 4,363, and it went up to about 6. Well, we'll call it a point. I always want to be realistic in our trading. That's very important. You know, there's things called slippage. You're never going to get the best. You're never going to get the bottom entry. You're never going to get the top exit. So you kind of always deal with that. The meat of the move. So I always say be realistic. You know, if it moves 3 points, say you get 1 point. But a 1 point on a high probability setup it could be a lot. Now, if we look at how the futures are set up, and if you're trading like, we're trading, say, on the prop accounts, we always use the example of the 50K account, which is usually about 20 something dollars that you could open up with one ES car. A car is short for contract. One ES, if it goes 1 point, is $50. One MES is 1/10 that, so it's $5. So there's a big difference between trading the ES and the MES. I say if it's a volatile market and you're not you're not short, trade the MES. I trade the MES a lot. But again, if you had 7, with a 50K account, they allow you to trade up to 7 ES. So 7 ES and you get 1 point is $350. Now that's just 1 point off. That's very easy to do on a HPS type of setup when you have a divergence and stuff. A point is not a big thing. But you also have to understand a point to the downside, is doable too because of the chop and stuff. So it always comes with a little danger, but just to put that in perspective, 7 MES cars, 1 point is just $35. Now, if you had a trade on, which like you had a really good super signal, the super signal is a combination of the best signals that we send, they typically give 10 points. If you had 7 ES cars on there and you got your 10 points in a perfect world, that would be $3,500. On a 50K account, you just need $3,000 to qualify. So you could qualify that easy. Then you're trading with a live account and you're actually getting the profits from that, and you can wire those out. So there's the path. The path is here. I love talking about the path and how to get to that path and understanding, the importance of following the rules. We have the criteria. We know what we're looking for. I teach that constantly, but to be in front of it is important, all right? And executing it and taking profits is important. These are things that I think are going to be the worst for you to manage, because of greed, stuff like that. Fear and greed. Always put your stop 1 tick underneath the divergence. If we notice that, do you notice that? So many times we get that little pullback, little pop, a little drop with a candle, a much higher low. That's what I've been showing you, right? And look at the big move. All you have to do is put that stop 1 tick under that low, and you're safe. You're safe. And you could, the hardest part, I always say, and I say this all the time, we'll continue to say it, the hardest thing about trading is when to take profits. When you trade in the DTR methodology, is when to take profits. There's a lot of rules that I use. Again, I'll send this, this will be available to you if you want. Cannot, I didn't spell that right. Candles cannot get above the 20. There we go. Rule number 1: start to trade with the 9-3 stochastics in your favor. If you're on the buy side, you want to make sure they're coming off the 20 or coming off the lows and pushing up. If you're on the sell side or a short side, you want to make it coming down off of 80 and heading down, the 9-3. It just makes sure that just kind of puts you in the right place at the right time all the time. You know, and so many times that we make mistakes, we look at our entry and we say, wow, I just bought it and the 9-3 is overbought. Well, of course it's pulling back. You don't have to deal with that pressure, you know. We could go back here and say, all right, overbought here. Here's an overbought. Would you go long here? Well, if you did, you had this to deal with. Now it got oversold. Would you go short here thinking it's going to fall down? Well, it just popped back up and it's got overbought again. And, you know, the chop will get you. The chop will get you. But it won't get you if you just continue to manage that. So that would be, again, another rule. All right, well, the name of the video was 7 Rules for Success. And I didn't even want to start putting down the rules instead of just talking about them. So we could always make sure to write stuff down. I find it very good to write things down. It kind of puts it in the memory banks better here. So again, number 1 is always don't overtrade. Trading whenever there is not an HPS setup is overtrading. That is the key, overtrading. Number 2, always enter a trade with the 9-3 on your side. And again, we just talked about that. And again, this is just very simple strategy. It's based off of our quad rotation, multiple time frames. We have 4 time frames here where we're looking at the 9-3, the 14. The 9-3, the 14-3, the 44, and the 60-10. That 60-10 is our bigger time frame. It's our bigger trend. It's comparable to looking at the 9-3 on a 5-minute time frame. So if we're looking at the 5-minute time frame, this is comparable to looking at the, you know, so this is a great little indicator that I use to kind of determine the trend. If it's above 50, it's usually pretty good. But if it's above 80 and even higher than that, above 85 and 90, that's extremely bullish. And that's when we start to look for our flags, which we had just before. We had that nice flag right here we took. You had a divergence back here. You had a sell divergence right here. You had a little flag here. You had a hidden divergence here. A lot of things happening tonight. And these are just little moves. Again, anytime we don't have one of those setups, we don't want to trade. We don't want to just guess. There's nothing really right here that I like. But if you were going to go short here, why would you? You know, because this is where we just talked about having that 9-3. Once that 9-3 gets oversold, it tends to bounce back up. Maybe it will fail, but why have that pressure? You know, why start off already in the hole? So it's very important to understand that concept right there. This could easily roll over. But, you know, wait until it rolls over. Wait until you had that trade up here. That was your trade to the short side. This is definitely a more higher risk trade to the short side because you have this rotation. So always enter the trade with the 9-3 on your side, long or short. If you're going long in a downtrending market, take your first profits on a 9-3 rotation. 9-3 rotation above 80 in case, let me fix that. Case of a long trade. In the case of a short trade, then you're just going to do the opposite. Then you move your stop to break even or close to it. What do I mean by that? If we can establish a downtrending market, and we did kind of have one today, the market was downtrending, downtrending, downtrending. And if you had a setup here, like here we had a trend line, we had a quad rotation here, and you get a bounce. Once that bounce got over 80 here, we kind of got up. I put that line in there just to kind of represent that 80 line. Once we touched that blue line up there, and we knew that everything is pointing down, the 200 period moving average, the 50, the 20, you know, everything is pointing down. The channel is down. Not even taking consideration the channel line that we ran into, or the 50 period moving average, or the previous low. There's a lot of levels here that told us to take your long off right there. But we're just concentrating on that 9-3 rotation. Your entry off the trend line, quad rotation, the rotation, you might as well take it off because most likely that trend is going to continue. And even if for some reason you go in long here and you get a little move up and it starts to fail and you don't get up to that 80, the first sign of that failure, you know, you might be in here, right? You might be in here, and you start to see that failure here. You're still going to be, you know, you're going to have a little profit at least. You don't want to just, you know, trade and say, all right, this is either going to work out or I'm going to get stopped out. Take the signals as they come, because the trend is your friend. So if you see it start to fail, take it off. You might actually get yourself out of the trade with a profit. The trend is down until you have a divergence. Once you have a divergence, then you have a much better chance of the trend breaking. So that's going to be a new rule coming up. Switch over. Let's go through the rest of the rules here. So the second part of that is, after you take your profits, take your first profits, you have multiple contracts, move your stop to break even or close to it at least. And I always say at least, because if you do have that rotation, you, for some reason you got in and it failed, you got in and you got your rotation and you wanted to hold on to a little bit more, like here, you got in here and it rotated, you got it up to 80, and right here, right there, you got above 80, trend was, you know, and then it started selling off again. But you could get it, you know, for whatever reason you got it. Maybe you saw the divergence here. Maybe it was a quad rotation. Maybe it was the trend line. Maybe it was the falling wedge pattern. Whatever reason got you in, and you're in it with a successful trade, take most of your profits off on the first rotation. All right, and then move your stop to break even, and you have nothing to worry about. And if it continues to go, then it goes. If it doesn't, then there's no harm, no foul. Let the market come back down. And again, that leads us into the next setup. Don't overtrade. Now, I said that at first, but that's how important it is. Because what we're pointing out here, what I'm pointing out, are just setups that we know. All right, we know that we have the quad rotation, we have a move up. We know that the first move over to 80, you know, if you take profits, these are little things that you're just going to keep you nickel and dime in the market, you know, being profitable in these trades. And it's harder to do than you think, because you know, you could say, all right, well, I think the market's breaking out here, I want to be long, I want to continue to be long, and you could. I mean, there's different type of traders. You have to realize what type of trader you are and apply that strategy to that time frame. So you had a little divergence here, and you had a nice little move. In this case, you got a little move up here, and you should took, you know, you could take profits on that. Now you can move your stop up to break even, wherever that was, and let it run. And if it moves a little bit higher, then it moves higher. But, you know, again, you're on the 1 minute time frame. Most likely it's going to chop. Market opens up here. Overnight, you get the first alert. This doesn't give you much, but it gets embedded here. It's a nice divergence, though. So the next rule here we're going to be talking about is how to determine where the profit is going to be. So if you have if you have a channel and you have a divergence, 9 times out of 10, your divergence is going to lead up to a breakout of the channel. So if it's a steep divergence like this is almost a textbook divergence. This is the type of divergence I was looking for during the day, but we just didn't see it. So now we're seeing it overnight. And the overnight divergence, you know, that was really, really good. All right, number 1, 2, 3, 4, 5. Number 5 here, never pass up a steep divergence. These are your money-making trades. And the steeper the divergence, we talked about this also. You know, when that second, especially on the 14.3, especially on the 44. I haven't seen any 44s. That's the next rule, though. But even on the 14.3 and the 4.3, if that's a steep divergence, and when I talk about the angle, we take the low of the first low, and we bring that trend line underneath the low of the second low, the higher low. And if that's above 10, you know, the angle goes in degrees. So if that's a kind of above 10 degrees angle, that's typically a very steep thing. Typically, we could see divergences happen around 6 degrees and stuff. Once they get steep like this, they become very, very strong. So the steeper the angle, the more you want to hold on to it, the better the setup. And again, you always want to watch that 60-minute rotation too. Once that starts to rotate back up after a divergence, you have a good chance that this rally is going to continue. And that's just some of the key things you want to kind of keep in mind. And again, that's just a small amount of things that we have to just pay attention to. It makes it boring for the day, but it is a, you know, if we're just waiting for that setup, and we're waiting for this setup, and we're taking it off, and we're just, you know, being very boring, what we call pikers, you know, just taking the standard stuff. It's not very exciting, but it's very profitable. See, the key is understanding when the signal is a good signal, taking the signal and taking it off. The opportunities are there every single day. A couple more rules and we're going to move on. Just remember, I send out these alerts so you don't have to be in front of the computer all the time. We have a special alert system that we send out for members, and I add that to the membership, which is very reasonable, and it's kind of cool. Works off the Zello system, so you can download the Zello app on your phone, and you can just connect it and you get an audio alert right on your phone. You don't even have to have your phone on. It's just going to come on like a walkie-talkie. It's really cool. And I only send those out when there's a super signal, and the super signal is very important to us. That's a combination of multiple setups. It's usually a divergence and a quad rotation, or anything that I find very, you know, a steep divergence. Could be anything that requires a super signal alert, because these are your money making things. And again, the important thing is to get those alerts out there. So if you want to find out more about that, like I said, just send out head over to DayTraderRockStar.com. We're doing a nice little promotion right now. But you could also just sign up for free. DTR.TV/free. That's DTR.TV/free. The markets here, let's just finish off on our rules here. Now, I mentioned the never pass up a steep divergence. These are your money-making trades. That's very important, the angles. The 44 divergence on the 1 minute chart is unbeatable, but very rare. So this is something that you would get an alert on, a 44. If you heard a 44 coming out, you want to get your ES charts, and you want to get your trades out there and lined up and ready to go. Now the 44 is this blue line down here. And you can see there's a slight 44 divergence right there. I've seen 44 divergences, steep ones, and the market here was major reversals on these. So eventually they happen, and when they happen, you have to be ready for them, or I have to be ready for them, and you're going to be ready for them. So again, this is a methodology. If you're not familiar with the lane divergence or divergence trading, it's very important that you learn. If you want to learn more, reach out to me. I do private coaching. I can get you set up on your accounts, even help you set up the prop accounts and get you qualified for those. That's very important, because remember, you're coming into the markets maybe for the first time, maybe not. Maybe you just don't want to risk your own money. This is a way of actually doing it, not risking your money, qualifying, and having a real account, and you're able to take out the first $10,000. You know, I'm working with someone right now. We're trying to put together a system where we're going to be linking up a lot of accounts and stuff. I don't want to go into it too much until we start to test it, and we're going to try to start testing it tomorrow. So I'm going to start testing that out tomorrow and see how that all works. But if you want to be part of that, again, reach out to me. So where you link up your account to mine, and we just do, it's a copy trader. All right, next thing here, we still have one more rule, and I wanted to see if there was any 44s here. Again, you won't see too many, but when you do see them, boy, do they go. I haven't seen any 44s fail either. Look at this steep. Now, this is what we call a relative divergence. Now, different type of divergences, where we come down and we we see the candle is down here. It's a little lower and this is a little higher, but the candle closing prices are right around there, and you're very close to all the closing prices. We look at closing prices more than we look at the wicks. And the wicks are the tails, these things that wick down here. So if you see closing prices all seem to line up together. Like there's the closing price, that is the closing price, that is, and then here and here and here. But look at the steepness of the divergence. Normally you would see the divergence, or that divergence be down at the same level because the price was at the same level. And then you actually see a little one here, just slight, maybe not. But that's a relative divergence, and it's a good one. And it started taking off, and you could, over time, you will understand those a little bit better. All right, you will. Now that's happened at 3 o'clock in the morning. 3 o'clock in the morning. It's great for European traders, and that they tend to happen around 3 o'clock when European markets open up. Here's another kind of a little divergence. Now, why are we seeing such great setups here overnight? I'll tell you one thing. There's a lot of algorithms, a lot of computer bots trading the markets, but overnight they don't. So you have some more pure moves, that we could actually identify. But again, I'm not usually around at 1:30 in the morning. That's one of the reasons I came up with the Rockbot. The Rockbot in the scripts that we run on the NinjaTrader. If you run NinjaTrader, I have scripts that identify all these setups. So that is another really kind of a great thing to know here at Day Trading Radio. If you do run the NinjaTrader platform, or you want to run these scripts on your machine, and they identify and take these trades for you, or at least identify them for you, that is great to have. And they usually they're usually spot on, right on the lows here. Look at these things. So again, that's on the Rockbot channel. That comes along with your membership, actually. And if you have the NinjaTrader platform, and you have the license for it, you can run your scripts on that. All right. That was a nice one there. Again, you can start to see this overnight trading might have to start. Again, we're seeing a lot of good setups tonight. Look at that, kind of all bunched up here. You see the lows are all kind of the same, but look at the higher low here. And then just, you know what, we got that divergence, and actually we started to see the move up right from that point. If we zoom out, this market went from going down to going up based off of that divergence. Right there was that divergence, and that was the big difference between, I could zoom out here, between the market going down and the market going up. So this is the only way. Well, I am 100% confident that those who learn this technique and get the alerts will qualify. You have to control, you have to really manage your own weaknesses. I always say that the method is sound. The weak link is the individual trader. The flags are great, understanding what a flag looks like, and we're only really trading 3 different setups. So we're not over trading, but you have to have those setups. And there's no holy grail in the market. Sometimes the market could have news and flash down and lose it. You don't want to just buy because you think you're going to buy. Wait for the setups. All right, very important. Oh, we had a little divergent. Here it is. What do we have here? We have a low here, kind of a double bottom low right there. And look at this. Look at this. The 44 here. Now that's at 3 in the morning again, but that was the beginning of that was the low. And again, I always say, show me a divergence, and I'll show you the market moving in the direction of the divergence. How do you not accept that? How do you not accept that, saying, well, we haven't seen a divergence any time. I just can't find one here. And when I see one, that is a huge move in the market. It was the low in the market. So just a matter of time before a setup comes to you and you're able to take that shot. Now, I love the analogies of being, you know, a hunter in the tree just waiting for your game to come by, but that's what we're doing. We're waiting for that setup. At 3 o'clock, for those out there who trade at 3 o'clock, I highly recommend it. I used to get up at 3 o'clock in the morning just to see if there was a divergence. But I was waking up everyone. I got banned from waking up in the middle of the night to trade. But hey, there's a great, I mean, every day, it seems like every day at 3 o'clock, that was going back to Tuesday. Let's take a look at the next day here. It's 3 o'clock again, another divergence right there. Another 3:30, another divergence right here. Wow. What time is it? Am I going to have to get up in 8 hours? Well, we're about to see. Market's actually pushing at the highs right now, but we're going to leave you off at that. Remember, well, our last rule. We need our last rule. How are we up to? 1, 2, 3, 4, 5, 6. And we need rule number 7. Well, you got to know what it is. Don't overtrade. That is the killer for all traders out there, is overtrading. And I can't stress that enough, that to put it down 3 times as 3 of the rules and the 7 top rules of being successful trading your own account or a prop account. The less time you're in the markets, the less time you're in a trade, the less the market has a chance of beating you down and taking your money, because that's what it's going to do. Right? And if you're having a hard time, that's okay. Everyone has that, you know. Take a break, concentrate, pull back, slow down. Slowing down your trades and waiting for the setup. And even if you don't get a setup, that's okay. You know, keep yourself busy. Keep yourself busy. And like I said, Day Trading Radio, we have a lot of tools here. So I want to just kind of touch base with that in a second. And then we'll let you go here. If you head over to Day Trading Radio, this is what you'll see. And right up here, if you click on this link here, it goes into a lot of detail, a lot of what I went into and where you could get a lot of this information. A lot of the charts, a lot of the super signals, and how I put together all this. This is all here, and you know, just a lot of good information here. I did a couple videos and the playbook trades and stuff. And this is the important part. All these notes and stuff talk about all the rules of each trade and how to get out of each trade, and a little notes on each one. There's tons of information there just for you out there. We go back here to the beginning of the page here. We see there's a couple packages here. Now, I know that, we have 2 3-month starter packages. It comes with everything. There's a basic one that doesn't include the scripts, which is a great deal. And then you have the 3-month that includes includes the scripts. Now, the scripts, if you have the NinjaTrader platform, you get these and you can run them on your own machines, which is absolutely. We have this new super signal which identifies these setups and places a trade, or at least alerts you, depending on how you want to do it. Also, I am doing a very special $99 90-minute one-on-one session, but you have to email me to see when I could fit you in, because a lot of I have some spaces available, but it has to be checked out exactly when that could be. And these could be used for anything. More education on how to trade, setting up your prop trading accounts and strategies, setting up your computers, setting up your trading, go over the school of stock, anything. I could use that for anything. There's a great video here on the thing. It was one of our, Etienne, if you might know him, Desire to Trade. He always has an interview with me every year. It's always a great interview. It talks about my methodology and the history and stuff. I highly recommend reading that, watching it. It's a great video. There's quite a few of them out there, a lot of interviews that I do. And then we talked about the prop trading. Here are the 2 prop trading firms that we use. If you go to Day Trading Radio, you can see it right there. I've opened the account, use the coupon codes, and DTR November, 71% off. And then Apex also, click on that, and the DTR Apex is the coupon code there, and that gives you the opportunity to qualify. You get the challenge account or the evaluation account. You apply the rules that I give you. You apply the alerts that I give you. Again, if you do sign up through this and you want to get those alerts, you become a member or at least a trial, you're going to get these alerts and you have a great chance of qualifying and opening up there. There's a lot of other things here at Day Trading Radio that you get with all this. The dashboard, the real-time alerts, 10 for 1,000 watch list, education and stuff. All right. If you want the monthly pack, this is the bonus I will give you right now. For those out there who might be listening to this video, if you email me saying you got to this point in the video and you would like to take the monthly plan with the bot scripts, I'll give you a month at $69.95 instead of $99.95. All right, you have to email me saying you would like to take advantage of the monthly scripts for $69.95 instead of $99.95. That's a good deal. I do a lot of stuff, a lot of speaking at the trade shows, and that's about it. So again, once you click on the members area here after you sign up, and if you go to, like I said, that's about it. Starter package, everything's self-explanatory. Have a great evening, everyone. I want to get back on the air now and do some trading, and we're always trading here at Day Trading Radio. Have a good one. You can reach me at ironaction@yahoo.com if you need to get in touch with me for any coaching or anything, or go to the website. There's plenty of information on there.